Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. It is the 20th of February, 2025. We're in the middle, today at least, of a minor pullback in the market. Things are a little bit on the weaker side, but we'll take a look at the indexes here in just a minute. This is Dr. Tom Carr coming to you from the live trading room of DrStoxx.com. And if you want to join us, you go over to DrStoxx.com. That's DrStoxx.com, your one stop shop for all things trading. Click on the subscribe button, go down to the live trading room, and you'll be good to go from there. So I'm coming to you live with about, I don't know how many dozens of other traders. We have about 300 people in the room itself. We also have a live options room, about 100 people in that room. And I share the trading ideas I have throughout the day. I give you my entry price, my stop price, my target price, the reasons for the trade, and I monitor those trades until they're closed out. So if you want to join us and learn some trading skills along the way, you're welcome to join us there in the live trading room. Okay, let's look at some charts. I did want to talk a little bit today about trading the Micro Eminis, and I'll tell you why I'm going in that direction because we're in a market right now. As you can see, this is the S&P 500. We're up against, we had all-time highs yesterday. That's the close bar right there. This is the daily chart. And today we're giving a lot of that back, and right now we're at about a 4 or 5 day low after and it's kind of difficult pinpointing the reasons for this. We do have several political headwinds coming at us now. We've got downsizing in the federal government. We've got tariffs being levied against some of our trading partners. And we still have some sticky inflation, which is not going away as easily as we thought. And we're starting to see a little bit of weakness in the jobs market, the labor market. So all of those things are not that great. And coupled with all of that, we had an earnings report out this morning from Walmart, which was not very good. And the market, after all-time highs yesterday, the market really pushed it lower. And if the planet's biggest retailer, box retailer, Amazon's the biggest, but planet's biggest box retailer is not doing all that well, that means the consumer is not doing all that well, and even at the discount stores, not spending as much as usual, and so that's a concern, big concern. So markets kind of pricing all of that in. Now, still, the trends are up. Most of your stocks, your big stocks that are at the top of the indexes, are up near all-time highs, and you've got also some interesting names that are popping higher on things like earnings and upgrades and analyst comments. So there are still some good things going on, but finding those sweet spots in the market that are performing well and and showing consistent gains, not just this choppy stuff, right? All this choppy stuff right in here really makes for very difficult swing trading. You've got up, down one day, up the next, down one, down the next, up the next, down the next, couple of days up, couple of days down, 3 days up, 3 days down. It's just not getting much in the way of traction and very, very difficult to swing trade in that sort of market condition. So, all of that's to say that given the nature of the bigger market, the broader market, we're looking at drilling down into some very, very short-term time frames and trading the micro E-minis. Something I did back in 2022 and again in 2023. I did it in a public way in 23, logged all of my trades, all of my daily profits and losses, weekly, monthly profits and losses, trading a single contract, a single E-mini contract. And I was mainly trading the indexes, but I did a little bit with gold and Bitcoin and oil as well. And after 7 months of doing that, doing it public in the live trading room, I ended up printing an average of $1,700 in profits per month. $1,700 in profits per month. I more than doubled my $10,000 account in that time frame. It was $11,000 in profits. So I took a $10,000 to $21,000 trading a single E-mini contract. They were almost all day trades. And then what I did was I took the four trading systems I was using, 3 day trading systems and 1 overnight trading system and put them into a webinar. If you're interested in that webinar, you can go over to DrStoxx.com. This is the webinar you want to look for: how to day trade Micro Eminis, make up to $1,700 per month per contract with a small account using 4 simple systems. And if you're interested in that, you go over to DrStoxx.com, click on the Learn to Trade trading webinars, and you're good to go. Back to the charts. So S&P 500, a little bit of a gap and go to the downside today, and you're going to see the same thing here for the NASDAQ and the small cap index, a gap down and go, and the Dow Jones is probably the worst. The Dow Jones is leading the way lower, which is kind of interesting, right? So you've got 2,000 stocks in the Russell 2000, and you've got 30 stocks in the Dow Jones, and the Dow Jones is underperforming the Russell. That's just what it is. The 30 stocks of the Dow, of course, are the biggest companies on the planet, and the 2,000 stocks in the Russell are the smallest companies on the planet. So you'd kind of think that small companies would do worse than the big blue chip guys, but that's not the case. Now, part of that is Walmart. Part of that is we've got some concerns in healthcare and pharmaceutical companies. They're in there. Yeah. So anyway, it is what it is. The only concern I have with the Dow is that we are right down here at an area of range support, right? We're up here at the highs, can't get through to all-time highs, can't break above that ceiling. And now we're breaking the floor. Not a good look, right, for the Dow. Doesn't mean that the Dow's going to drag the rest of the indexes down with it. It doesn't have to do that. The Dow, of course, as the smallest index, is going to be hyper influenced by just the handful of losers at the top of the range. And whereas the S&P 500 blue chip companies, everything gets kind of spread out a little more evenly. So the S&P 500 still well above range support, right? Here's your floor for range support, right down there around 66,020. Your range support for the NASDAQ 100 is even lower still. It's way down here at 21,250. And we also have the 21 period moving average below us, which should act as some support, and this little pullback trend line, right? We had sequence of three lower highs before we had the breakout last week. Follow through day, couple of consolidation days, not at all-time highs. The all-time highs are over here, but on a closing basis, I'm pretty sure those are all-time highs. And then a little bit of back and fill, but we're holding the midline of the LRC. That's always a good sign. And we're starting to bounce back. Yeah, we're actually bouncing back quite nicely here on the NASDAQ. Okay, we are long the Bitcoin. Let's take a look at that. It's been in this very tight trading range. It gave us a scary drop on Tuesday, and that was the one that knocked us out of the trade. So we had to take a loss on the stop there. And then on an unofficial basis, because I don't like to get back into a losing trade right away, a lot of folks can't follow me in that because of the wash sale rules. Don't know why they have those rules, but they do. But we had to get back in because of the setup here. So it's an inside day bar yesterday in the pink zone of an uptrending LRC. In fact, I'm going to take this LRC off, which was put together by a very kind guy in our live trading room. He took my LRC indicator and optimized it. I just prefer, I'm just an old-fashioned guy. I like to use the 100 period look back without any sort of optimization. And the LRC is a dynamic indicator anyway, so it will expand on expanding ranges. It will contract on tight ranges. It will shift its trend based on recent price action. But we had to jump back into Bitcoin because uptrending LRC, inside day bar after a big flush out move on heavy volume, and from the pink zone, right? This is your buy zone down here in an uptrend, and this is your sell zone in a downtrend. and then a follow through day today. So now we have a 3 bar reversal on Bitcoin. I think we can maybe look at some derivative plays here with MicroStrategy and Coin. Those are usually the two that I recommend as stocks to buy when Bitcoin is doing well. Take a quick look at gold. Gold is an interesting play. It's a bullish setup here for sure, but it is oversold. We had some high volume selling in recent trade, and now we've got news. I mean, it's been out for a few days anyway, but news that maybe all the gold in Fort Knox isn't all there. And there's going to be, with Trump and Musk, there's going to be some sort of an audit of that. Interesting, right? Very interesting. There's never a dull day in the Trump administration, whether it was the first one or this one, um, and especially with Musk on board. And I do think that if the gold in Fort Knox is gone, I think you're going to see a major spike in the gold prices. If it's all there, I don't know. We'll have to see. But gold is also being bought by central banks all around the world. China, big buyer of our gold, and that also is keeping a good, healthy bid under gold. Oil is up today, but I do think that, yeah, actually, this is kind of a nice little setup here. So we have the long pullback, long pullback. We actually tried to buy it right in here, got off to a good start, and then stopped us out. Now we've got a double bottom, and or we could say that's a rounded bottom on the pullback, and we're starting to get some traction to the upside, but it is not a good trade unless you're day trading this. It's just a lot of intraday volatility. It's up, down, up, down, up, down. And some of that is geopolitical. Some of that is Ukraine, Russia war. Some of that is drill, baby, drill. And all kinds of other things going on. All right, so keep an eye on oil. I do think that if it gets back up above the fulcrum there of the double bottom, it's going to be okay, going to do well. And we've got, actually, this is good to see. So Tuesday, we had a buy signal flash for the yield, 10-year yield, which pushed bonds down. And then it reversed yesterday, and we're getting a follow through on the reverse today. We're down, however, in the pink zone or near the pink zone of an uptrending LRC, still very vulnerable to the upside. We don't want to see yields go up. We don't want to see bonds go down. That creates a negative macro for stocks. And so we'll have to watch this one, but it is good. It's a good thing that this is falling. Now, stocks are also falling today, so they don't always go in sync, but that should help stabilize things over time. Okay, so let's talk a little bit about trading the Micro Eminis, and to do that, I'm not going to mess up my chart setup here, but the way I teach trading the Micro Eminis in my webinar, you've got 4 trading systems. 3 of them are day trades, and one is an overnight or even a multi-day swing trade system. We won't talk about that. The 3 day trade systems, they vary a bit in terms of how many signals they'll give you each day. But if you were trading all 3 of them, you're going to get a dozen signals every day. And that's only if you're trading the 4 major indexes, right? The Dow, the S&P, the Nasdaq, and the Russell small cap. If you add on gold, you can trade gold, you can trade silver, you can trade the euro, you can trade Bitcoin. I think Bitcoin is a great one to trade. You can trade copper. There are all kinds of Micro E-mini contracts now that are very, very good. Not all of them are really trade worthy. Some of them are a little bit illiquid. Some of them make kind of erratic movements, but your indexes and your metals and Bitcoin, I would focus on those. Oil is pretty good too, actually. So here's, in general, we use 2 charts for these day trading systems, a 5-minute chart and a 1-minute chart. In very general terms, because I don't want to give away the secrets here, but on the 5-minute chart, we're looking for trend, either up or down. That will determine whether we go long or short. And on the 1-minute chart, we're looking for our entry signal. So entry signals, as I teach them, are 100% objective. You're looking for A, B, and C to line up. And when they do, boom, you're long, or boom, you're short. And then you set your stop loss below a recent pivot low, and you double that to set your target price. And that varies a little bit with systems. So if we're trading one system, that's how we set stop and target. If we're trading a different system, we're going to use a different framework for your stops and targets. But it's all 100% objective. And if you were able to automate these systems, I think you could just kind of let it run as an ATM machine, right? I haven't done that because I prefer to be in control of my trading. And they're always, when you have 23 years of trading under your belt, you can pretty much look at a chart that has a valid signal, but you just know you're not going to take it because there are some factors that aren't aspects of the system that would prohibit you from taking that signal. So I like to keep control of the system. But in general, if the 5 minute chart is trending higher, we're looking for a long signal on the 1 minute chart. If the 5 minute chart is trending lower, we're looking for a entry signal on the 1 minute chart to go short. So, with that in mind, one of the beautiful things about trading the micro E-minis is one, if you only trade a single contract, you're really not taking on a whole lot of risk. Yes, these are leveraged instruments, but I think you'd find that you're probably going to take much smaller losses in the micros than you would trading stocks. And when they are moving in your favor, you're going to see those profits stack in a way that you don't normally see with stocks unless you happen to latch on to a real runner. It does happen, but boy, you can really. What I like about the micro E-minis is that when you get your signals right, you're trading a system like this with very robust. I had a 76% win rate on that 7 month experiment. And so if you've got a set of very robust systems and you're trading them objectively and without emotion attached, then you can expect to see pretty small losses and some nice outsized gains. As I said, 7 months. It only took me 7 months to double my $10,000 account. Now, the other thing I like about micro E-minis is that you can day trade them all day long, 24/7 almost. They are closed on Sunday, but until Sunday night. But pretty much 24 hours a day, with one exception. There's 1 hour between 5 p.m., 6 p.m. Eastern Standard Time. You can't, they're shut down at that point, but after that, they're open. And although they're pretty illiquid overnight and early morning, but still, if you want to do it, by means, go ahead and trade them then. And you can do it with a small account. You don't need a $25,000 pattern day trade rule account to day trade the futures contracts. You can trade them all you want, in and out, 100 times a day if you want, on a $5,000 account, $7,000 account. I would say the very, very minimum account size to day trade just one micro E-mini contract and only one trade open at a time would be, in my mind, about $2,500, $3,000. To hold those positions overnight, you're probably going to need $1,500 to $2,000, depending on which instruments you're trading. So I would say $3,000 would be a very, very small minimum. If you're day trading these, you're not going to hold them overnight, so it shouldn't be a problem with like a margin call or anything like that. But you do want to have a little bit of cushion in your cash, especially if you're fairly new to trading, just to kind of give yourself some extra protection during the learning curve of these trading systems. And I started with $10,000. I did, however, take more than one trade at a time. So if I'm looking at gold and I've got a buy signal and the Nasdaq and I've got a sell signal, I've got those on at the same time. And I think I had a maximum open of 5 trades at the time, but I don't think I was there very often. 2 or 3 trades at a time is just about right for my stress level, at least. And so again, $10,000 became $21,000 in 7 months, trading a single contract. And I need to emphasize that. So let's say you're trading a single contract and you turn 10,000 into 20,000. Well, now you can start trading 2 contracts and you're taking on the same risk that you were taking on trading 1 contract at the start of that process. You get to 30, start taking on 3 contracts at a time. You get to 40, you take on 4 contracts, et cetera, et cetera. And you can see how that's going to steamroll, right? Because the first 10,000 to 20,000 move, that's a doubling of the account. But 20,000 to 30,000 is only 50%. 30,000 to 40,000 is 25%. So you can see that you're going to start stacking. You're going to scale your position size faster and faster as you have more and more success. So I teach all of that in the webinar, by the way. If you're trying to write all this stuff down, I do recommend the webinar. Well, the webinar, by the way, comes with this is an important point. The webinar comes with a 1 month free trial to TrendSpider. TrendSpider, I could be totally wrong, but of all the commercial charting packages out there, TradingView is one of them, and it's my favorite one. But TrendSpider is the only one that I know of that has real-time data for the Micro Eminis. TrendSpider, I'm sorry, TradingView does not. And I talked to the guy. I know the owner of it because he advertised in one of my books. He's a Swedish guy. I think he lives in London, which is why you see kind of odd timestamps down at the bottom. They're not American times. And I asked him, why don't you have real time for the futures contracts? You've got them for everything else. Why not the futures? And he said, because the exchange wants a $100,000 contract per year per instrument for real time data. I mean, it seems a little bit much, a little bit rich, but I guess he figured that was not it was not worth it for him to make that kind of investment. So unfortunately, futures contracts on TradingView are delayed 10, 15 minutes, something like that. You can, if you really, really want to use TradingView, you can go over and use not the futures, but you can use the ETFs, right? So for the MYM, which is the Dow Jones, you would use DIA ETF. And if you get a signal on DIA, you would go long or short MYM. SPY, same thing. You get a signal on SPY, you go over to MES in your trading platform, and you trade that long or short. Now, my trading platform, I use Interactive Brokers, and it allows me to put all the parameters that are needed for the webinar and for my 4 trading systems onto the charts there, and they're all real time. So I have my 1-minute chart next to my 5-minute chart. I have an hourly chart over on the side just for additional reference. And with a click of the mouse, I can shift back and forth between the different trading systems, and the different templates come up. So each trading system uses a slightly different configuration in terms of the technical indicators. So it's not real easy to go back and forth between them unless you have that. TradingView, I think, allows for that. You can save a template and then you can switch back and forth between templates. I just don't use that. I've never used that before in TradingView. I'm sure it's there somewhere. But again, TrendSpider, and you'll get a free. No, I'm sorry. You won't get a free. I made a mistake there. I apologize. You get a free month of TrendSpider with my pullback webinar. That's a whole different kind of trading system, but not with the trading of the Micro Eminis. But just to let you know, if you already have a TrendSpider account, you're good. You're covered because you've got real-time data. All right, so enough about that. I just wanted to let the folks in my live trading room know that I will be focusing a bit more on short-term trading. Don't know if we'll do a whole lot of day trading because, man, it's a tax on my stress level. and it's one thing when you're trading for yourself and it's just your own account. Of course, my account helps my family, so I don't want to blow my account at all. But if you're only trading for your own account, there's one level of stress associated with that. And if you're trading and you've got 300 people looking over your shoulder and trying to trade the same thing, that's a bit of stress, right? That's a whole nother level of stress. So I prefer to take a little bit of a longer view, take a little bit of a wider stop, give ourselves a little more time. We can relax a little bit with these trades. We can give them some wiggle room and that kind of thing. When you're day trading, you'd see once you've had some experience at it that it's just a different level of stress. And you're pretty much glued to the screen all throughout the day because, yeah, you do need to make some adjustments sometimes. And anyway, I'm not going to say any more about that, but just to let you know, let those in the live trading room know that we will be doing a bit of these micro trades. We've been doing micro trades all along, but we've been swing trading them. Now we're going to drill down into some of the shorter time frames and do some short-term trades, most of which probably will be day trades, but not like the 5-10 minute kind, the kind that takes several hours to develop, right? And that way too, it's a little easier for you all to follow me, the members of the room to follow me, because if you don't get right in at my price and it's a 5 minute trade, right? It's already 1 minute into the trade and maybe we're already halfway to the target or we're halfway to the stop. You don't want to miss out on that kind of stuff. So, all right, so this is the daily chart. Let's go over to some of the mags. I'm not going to do a whole lot today, but I did want to show my members one other thing that is going to help us, I think, keep us out of certain trades that when you've got chop like this, up one day, down the next, you can sometimes get caught in the middle of a trading range, and you either have to have your stop really wide and take on more risk, or you're going to just have to have a lower win rate because you're going to get stopped out with all those with all the churn that goes on, right? The swings, intraday swings up and down. We can see them all over the map here. So I've got a solution to that. So I want to introduce you to that. But more on that in just a minute. Let's just swing through these. So these are the mags, right? The biggest stocks on the planet. Banks are hit hard today. JP Morgan, big red stick. The bank index, XLF, has been one of the best trending indexes in the market, right? We had a fairly healthy trend down, hit the pink zone of an uptrending LRC, printed a 3-bar reversal, took a little while to get going, and it's been all up to the races from there. Perfect uptrend, nice slow churn higher, then a sideways consolidation that has hit the top, reverse back down, and you can see it's on some pretty heavy bearish divergence up there near the blue zone. And now we're even below the 21. So JP Morgan is an off limits play. It's a no-go zone, as I like to call it. That red stick is just too far down to short, but you don't wait. You can't buy it now. You have to wait until you see the bottom in place. Tesla, I like Tesla at 350. So it hit 350 several times today, got down to about 348, got up to 352, but it's just been hovering right around that 350 line. That's the line. If you go back like 1, 2, 3, 4 days in a row, that's a support line. It's not the strongest support line out there. It's not really that strong at all, but you can see if we go all the way back, it was support here and it was resistance here and it's resistance here. So, it's an S&R flip, we call it. When support becomes resistance, the resistance becomes support. That line there on the flip is a very important line, and as long as we're above it, we should think long. As long as we're below it, we should think short. I'm not going long Tesla. I don't like the red stick today. However, volume is light. Yesterday was good, a good green day in a pretty choppy market. So I think there is some possibility here that Tesla will hold 350 and reverse back higher tomorrow, but I don't know. And it isn't an uptrend, and it is in the pink zone, and all those things are usually pretty good for getting on track. It's not a buy today, however. Netflix, not too bad, right? A little bit of a pullback to the midline of the LRC after hitting all-time highs a few days ago. There was some modest divergence, so it's kind of playing that out, right? Just pricing in a little bit of, maybe Walmart is affecting Costco. I'm sorry, this isn't Costco. This is Netflix. So Netflix, but I think this has been, correct me if I'm wrong, but I'm pretty sure this is the strongest of the MAG group, has been for several weeks. You have the power gap on earnings. We came nowhere near closing that gap, and it's been just a slow bleed higher ever since. Buy the dips. This one is a pretty good dip, right? I'm not really that interested in a 4-digit stock right now, but if you are, Netflix looks pretty good today. Amazon, uh, okay, if I want to trade Amazon again, you guys let me know. I keep getting in and out, in and out. It's been in the pink zone. It gave us an inside day bar reversal yesterday on pretty good volume, above average volume, and just no follow through today. Gap down. Now we're trading near the lows of the day. Even with the NASDAQ bouncing back a bit off the lows, it's not doing it today. I don't know. Amazon, of course, it will trade in partnership with Walmart because they both are looking at the same thing. Amazon it has a bunch of other stuff too, right? Cloud computing and AI, but oh boy, not looking very good here for Amazon. One maybe a little ray of hope is if it hits that former resistance line, now support. It's not a flat line though. It's a slanted line. Those aren't usually as strong. We'll see. But I tell you what, if Amazon is going to be a trade for us at all, it's got to reverse strongly higher tomorrow and take out today's high. Avgo is just in this yellow box, and I don't think it's going to get out of that yellow box anytime real soon. Not a bad trade if you want to sell some premium, which we had been doing. But when we sell premium, we like to buy long puts, out of the money long puts for support, protection, and we're just a little too close to earnings to do that. So we are short. We are short Facebook. We got short early yesterday and follow through day to day. Now I'm not sure it's going to go any further because we're at the 21. We're holding, but I don't know. 700 is a line in the sand. So if it stays under 700 for a day or two, then next week could print us a leg lower. We'll see. AMD. So I did buy some AMD today. Right now, it's not looking so good, right? That's a reversal bar, and it is a classic reversal bar. Unfortunately, it was up, took out some highs, sucked us in. You nasty guy, sucked us in. The one thing I like about AMD, however, not only is everybody in my pro trading group interested in it, not only is it getting all kinds of great call flow, but it did break out yesterday, and is still above that breakout today. So I'm kind of hoping today is a trap for the bears. We reverse back up tomorrow, and we've got a wide stop on this, and it's a small position. So that's another way you can kind of deal with some of this intraday volatility. Small size, wide stop, high target, lots of patience. Okay, let's see. So this guy can come all the way down to about 106, and we're still okay. Google. So Google has been doing this, right? Little tiny dojis, several of these. Now we're printing another one today. Inside day yesterday, and it's a green reversal inside day bar after a long pullback. That's usually the mark of a near-term reversal back higher. No follow through today, but then of course the market is pretty bad, and we are trading well off the lows of the day. So that's a good sign for Google. Apple is green. There aren't too many greens today, but Apple is one of them. Product reveal yesterday. Another iPhone. Yay! Just like the last time. Another iPhone. Just like the time before. Another iPhone. Anyway, it's trailing higher slowly. It's a slow grind higher after a breakout. Not too bad. Not too bad at all. NVIDIA, 140 is the key. When it's above and it closes above, and I don't think it's closed above yet in this move, if it can close above 140, it's got a pretty good chance of getting up to 150, 250, and then 175 after that. Microsoft, we are long Microsoft in the in both rooms, in the live trading room, MSFU, and in the options room, we're long some calls. We're in a bullish call spread, and this is the best looking mag today. Now, this is a good chart to show you what I want to talk about, and this will end our time together today. So when the market is squirrely like this, there are all kinds of ways you can deal with it and continue to build your profit curve, right? Continue to see those profits stack up and your losses get minimized. We can reduce time frame. We can give us wider stops with smaller size. But another thing you can do is you can look for deep oversold stocks in uptrends. When you've got a deep oversold stock, right? So the indexes are up, the S&P, the Nasdaq, they're up near all-time highs. Their vulnerability to the downside is quite high. But when you've got the indexes trailing higher or up near all-time highs, and you've got a strong stock like Microsoft down near support lows, right? The risk now has come out of Microsoft, and that's why it's up today, and the Nasdaq is down. So how do you determine that? Well, I like to use the LRC, the linear regression channel. When you get down into the pink zone, you're down near 2.0 standard deviation. 85% of your trading is going to be above that level. And so you have a very good chance, right? The odds are in your favor that the next move from the pink zone is going to be to the upside. You can increase that chance by looking for LRC that is it itself is in an uptrend. It just barely is for Microsoft. You can see by looking at the top of the blue line and the price lines here, the price lines and the blue line are getting further and further away. So there is a very slight uptrend. And thirdly, okay, so pull back to the pink zone, uptrending LRC, bullish divergence. Put those three together, right? And if you can make a list of stocks that are showing those three things, you've got a pretty good buy list. And do the same thing on the short side. So look for downtrending LRCs, stocks trading up in the blue zone, bearish divergence, make that list your short list, right? So if we take these trades that are already that have already priced in, they've already priced in market risk. Their propensity to keep going lower is much lower than the indexes at the very top of the range. So indexes at the top of the range have a lot of downside risk. Stocks trading at the low end of their range have upside risk. So that's what we're looking for. Now, I did make a list of some of those. I think these are still good. I haven't checked them today. But let's look at a few of those. So AI, right? Nice looking trend. Now, you don't want to buy this ahead of earnings, but uptrending LRC down in the pink zone. Nice looking hammer candle today. Now, there isn't bullish divergence, so we're missing that piece, but I put it on my list just in case that shows up. Let's take a look at coin today because Bitcoin is up. Pink zone touch today and a falling wedge. It's probably not where I would put that top line. Should be more like that. We did have recent bullish divergence, but not a whole lot. And there's not yet bullish divergence down here. I think in order for the indicator to print bullish or bearish divergence, it will only do it on a green bar, right? So it's starting to go up a little bit higher, and then you get a pivot low that then can be read as in divergence. It will show at least divergence in the stochastics because it's showing stochastics down here, and it is showing a higher low. I like DocuSign. At least I did like it yesterday. We're actually below the LRC. A lot of little dojis in here which signal indecision, which typically, if you get those at the end of a downtrend, can mean reversal is imminent. We did have divergence yesterday, pink 2 days ago, but not showing us yet a buy signal, right? We don't buy on red candles generally. We like to buy on green candles and usually with pretty good volume. Google is not bad today. We looked at this chart earlier. There was divergence a little while ago. We're still in the pink zone or near it and looking like we're holding at least. We're long Bitcoin because of this, right? Pink zone, inside day bar, no divergence yet. So we'll have to wait and see if that shows up. But I do like the move that it's making today. Let's take a look at MSTR. It's getting there, right? We're not in the pink zone yet. We don't have divergence yet, but this is just on the watch list to see if that shows up. So it's just going sideways. I mean, of course, Bitcoin itself did that also. Wix, oh no, that's a disaster. So earnings were out yesterday. It was a big up on good earnings, and then it was all the way down and follow through today on heavy volume. Oh boy, that's an ugly I do like the discretionary index. It's down in the pink zone right now. It's not a good day today. Looked okay yesterday, not so good today, but we'll wait and see. We're just waiting for divergence to show up, but you can kind of get the point, right? You see that here's a good one, right? Pink zone, green candle, divergence. Your risk has been taken out of the trade for the most part. Earnings are tonight, so you don't want to buy block tonight or today, but we'll see where it goes after earnings tomorrow. And I have a feeling I've got some guys in the pro trader group that are nibbling on some calls for tomorrow. They expire tomorrow. They've got out of the money, so it's just like a total lotto trade, right? But we'll see if they're right. We'll see. All right, guys, I'm going to have to let you go. I'm going to get back to charting or monitoring the micro trades. We'll see if one shows up before we close out trading today. Otherwise, again, we're still kind of bouncing here off the lows of the day. That's a good sign. God bless everybody. Have a great rest of the afternoon. And we'll see you back in the main room in just a little bit after I produce the video. Bye for now.